Hi, welcome to the Stockscores Market Minutes for September 2nd, 2024. Lots going on in this week's video. I'm going to begin with a look at three stocks that I think are worth considering for buys. I will show you not only those three stocks, but also how I found them. And as always, try to teach you a little bit about how to identify opportunities like these three. I've also got some free education sessions coming up at Stockscores.com. I'll give you the details of that. We're going to look at the overall markets. There's some important things going on in the stock, commodity, and bond markets. I will walk you through those charts. And then finally, at the end of the video, I'm going to walk you through a day trade that gained better than 75% in just a single day. I'll show you the entry point, the exit point, and talk about how I found that one as well. All right, so let's get into the first topic, which is three stocks to consider for buying right now. Now, I want to make the important distinction. I am not a licensed investment advisor. I've been trading the stock market for better than 30 years, so I'm pretty good at analyzing stocks. But when I show you these stocks, what I really want you to understand is you need to do your own due diligence, look at them for yourself, make sure that you like them for your own reasons. I'll describe what I like about them as well. All right, so what are they? Well, a couple of things to mention as sort of a theme, and that is we're seeing a rotation of money from the large caps into the small caps. I've talked about that for a couple of months now, and I think it's starting to be attractive to look at some of the lower price stocks for opportunities. So with that in mind, I went to the Stockscores market scan, and I looked for stocks that were under $10 that had what I call a sentiment stock score. It's my own indicator that you can learn more about at stockscores.com in the trader training section of the website. In that instance, we're looking for stocks with a sentiment stock score of at least 60. And then I wanted stocks that were quite liquid. So stocks that traded at least 10,000 times a day on Friday. And part of that is because these videos get watched by a lot of people. I didn't want to talk about stocks that just aren't very actively traded because it starts to become sort of a market moving event. So we try to focus on stocks that have lots of volume and are worth considering in that regard. So when we look at the charts, what I'm looking for are stocks that are building a rising bottom, which is a sign of optimism. I'm going to show you this on the charts in just a moment, and are above the 3-year downward trend line. Okay, so here's the first one, EVGO. And it is in this downward trend. 2 months ago, it broke the downward trend line. It's been building rising bottoms and is now starting to break out from that rising bottom pattern. Now, when a stock is in a downward trend, we don't want to consider it. Anytime there's falling tops, we just stay away. And you'll notice that the Stockscores indicators are fairly low. Over here on the right, you can see that the Stockscores indicators are climbing. They're moving above 60. And that's a sign that momentum is changing. There's optimism coming into the chart. And we'll see that as a theme as I go through these three. So let's look at the next one, AUR, which is a US listed stock. And again, you can see that the stock scores have started to climb, which is the reason I look at it. But the reason I'm interested in it isn't the stock scores, because the chart pattern is getting close to a breakout through this ceiling price that has held up for a long time. You know, it was a very hot stock back in 2021 and then really gave up a lot of those gains, has been sort of basing for 2 years and is now starting to build optimism and move through that resistance. So that's another one that I like. The third one, again, similar chart pattern, a stock coming out of a long-term downward trend, building rising bottoms, has been in this sideways pattern for a while, and now we're seeing the stock start to move out of that pattern. Now, these are stocks that I don't think are, things that are going to necessarily move next week. They're stocks that I think are good for the months ahead, not the days ahead or even the weeks ahead. So do your own due diligence on them and make your own calls. And I want to show you quickly how I found these. I have a tool on the Stockscores website called the Market Scan tool. This is a tool available to members of Stockscores. And what I've done is I've set up a little scan here, very simple, looking for a sentiment stock score greater than 60, lower price stocks between $1 and $10. And this scan will work on higher price stocks as well, but this week I wanted to focus on the lower priced ones. I want them to be up at least 5% over the last 10 days. And then finally, again, that liquidity factor of at least 10,000 trades a day. So I ran that market scan. It found 27 stocks. I then go through the charts, and I can go through them one at a time with what we call the Slideshow Viewer. I can go through them 10 at a time with the Gallery Viewer. And there's a number of them that look decent. This one is an example, OPK, another stock that looks promising. I don't think it's as good as the other three. But as I go through these, here you see EOSE, another one that I think is good. The reason I didn't love this one is I think there's going to be some resistance up here, and I don't know that the risk-reward ratio makes great sense. These are all concepts that I, of course, teach in the different programs that I do on Stockscores, and I'll give you some information in just a moment about some free lessons, some free classes that I'm going to do in the month of October, and totally free. You can register for those. I'll show you how to do that in just a moment. Let's just continue through here until we get to the first one that I liked. LCID was good. Nokia looks pretty good. Here's EVGO. So there you can see how that stock came up in that scan. All right, so before we move on to the market analysis, as I always do, just want to let you know again about these 4 education sessions that I have coming up in the month of October. They're free. Register at stockscores.com. You can see the topics here. If I jump back to the Stockscores website, just go to the home page, and down the screen here you can see the events. If I click on more info, there you have the details of the sessions in October, 15th, 16th, 17th, and 19th. Again, totally free. For those of you that have been watching my videos for a while, you may want to learn a little more about how I pick stocks, how I analyze markets. It's all very simple. If you can draw a straight line with a ruler and look at some charts, I'm sure you'll get a lot out of these sessions. All right, let's get into this week's market analysis. As I said at the top of the video, I think there's some important things happening in the market in different ways, and we want to begin this week, as always, with a look at the S&P 500. And last week I talked about how the market was likely to move down. It didn't really move down. It didn't move up either this week, but I still think that there is some risk here. And the reason is the market has rallied up to resistance and is stalling at that level. Now, the critical thing in the month of September is, what is the Fed going to do with interest rates? Are they going to lower a 1/4 point? Are they going to lower a 1/2 point? The market's predicting 65% chance of a 1/4 point, 35% chance of a 1/2 point. But we're going to see that move around, and that is going to be predicted by the bond market. I'll show you the bond market chart in just a minute. So I still think that as long as the market is bumping its head on this resistance level, there's a decent chance we're going to see it move lower. That doesn't mean that I think the entire stock market looks bad. I think it's mostly that we're going to see profit taking, and we have been seeing profit taking in those large cap tech stocks. So namely Nvidia. I did a video this past week on Nvidia likely moving down on earnings, and it did exactly that. And I think we could see that spread a little bit. I don't think it's a fire sale for stocks like Microsoft, Nvidia, Google, Amazon, Apple. These are good companies, but they've made considerable gains. And as I've talked about in the last couple of months, we're seeing that rotation out of those large cap tech stocks and into the broader market. So when we look at the chart of the S&P 500 here, one thing we have to keep in mind is that it is being held up by the broader market, which is doing okay, while those large cap tech stocks are showing a little bit of weakness. And in the end, it kind of balances it out as we are, as I said, sort of bumping up against that resistance level. All right, if we look at the 1-month chart on the S&P, you can see that it was pretty much sideways for the last couple of weeks. Again, hitting this resistance level over here. Right at the end of the day, there was a little ramp up into the close, probably a little month-end window dressing. We'll see if that can hold into next week. Now, the NASDAQ looks a little bit worse than the S&P, and the reason is if we look at the 1-year daily chart, what we see is that there is this falling top here. And this is what I'm meaning when I say that those large cap tech stocks are not looking as strong as the broader market, as we're getting profit taking in that group, and that shows up even more in the NASDAQ 100 chart. Unlike the S&P, which is bumping up against its all-time highs, the NASDAQ is built a falling top. And We're now potentially breaking down from a falling top. Again, I don't think it's a terrible chart. You're going to see my ratings in just a moment. It's not great, but it's not terrible either. And I think that there are opportunities in NASDAQ, just not in those stocks that have already made considerable gains. Now we'll see here on the short-term chart, a little build of pessimism this week towards support. And again, NVIDIA important in that. And if we break down through this short-term bottom on the Qs at around 470, we could see a little more weakness. So watch for that next week. Now, where is the money flowing? Well, as I said earlier, a lot of money flowing into the small cap market, into the broader market. And that's why I think there's actually better potential in the stocks that make up the Russell 2000. So on screen now, we have a chart of IWM, which is the Russell 2000 Index ETF. You can see that it's had quite a lot of volatility the last 2 months. It moved up, it broke out, it pulled back sharply on those inflation concerns, and then now it's coming back. This sector of the market, heavily driven by what the Fed does with interest rates. So we're going to talk about the bond market in just a moment. I'll show you how that's predicting probably lower rates through the end of the year, but we'll talk about that in just a moment. If that happens, if the bond market is right and we do see lower interest rates, we're going to see this market do fairly well. All right, but because of the volatility in the small cap sector, I think you want to be very selective. You want to look for stocks that have alpha. When I say have alpha, what I mean is stocks that are trading with abnormal volume, strong liquidity. They're catching the buyer interest. These are the stocks that I love to day trade and swing trade. The ones that maybe only move for a few days, perhaps a couple of weeks, but that's where the action is. Or like the stocks I showed at the top of the video, where they were in a long-term downward trend, they've based out nicely, and now they're starting to build rising bottoms and break up through ceilings that may have held up for the last 1 or 2 years. We've had higher interest rates for a couple of years, and as that starts to change, we're going to see those small cap stocks start to move up through resistance, start to build rising bottoms on the chart, which is a sign of optimism. All right, let's take a look at the Canadian market, which also looks even better than the others. And much of the reason is that commodity prices are getting stronger, particularly gold. And so here you can see that the Canadian market is still in this upward sloping channel. And it may bounce around in here, but generally looks like it wants to go higher. Canadian market has a lot of banks, and some of the banks are doing well. Royal Bank, Bank of Nova Scotia. Others, not so much. Bank of Montreal, TD Bank, kind of lagging. So you got to pick your bank if you want to put money into those. And then, of course, the commodity stocks, particularly the mining sector, doing well. Oil still lagging. We're going to talk about oil with the oil chart in just a moment. Let's jump into the gold chart because I think that one's quite important, particularly for the Canadian market. And it's one of the strong groups, probably the strongest sector right now. You can see the trend is up. Anytime you have an upward trend, you go up quickly, you pull back to the trend line, you move up. We may come back to this trend line a little bit, but I think gold is still a place to hold. Buying opportunities, maybe a little bit of a chase right now. I would rather wait for pullbacks in the gold sector, in the gold miners, wait for pullbacks and then the break of a pullback. Don't chase stocks when they run away from their trend lines. That's one of the topics that I'll try to teach you at the webinars coming up in October. All right, let's move along now to oil. USO is one of the symbols for oil. This is the 3-year weekly chart, and you can see that we're building this ascending triangle pattern, but it's essentially been sideways for 1.5 years, pushing 2 years. We need this market to break out. Notice the stock scores, the sentiment stock score is 33. That's not great. And that's really a case of it not being a bad market. It's probably better than the score would indicate, but it's kind of a sleepy market because oil prices are not all that strong. Now we do have large cap energy stocks in Canada doing well, but the broader market, the smaller cap energy stocks, which actually have great yields, are just not really participating as the large caps are. Let's take a look at the chart of some currencies. Now we're going to start with Bitcoin because I know many of you love to look at the chart of Bitcoin. Anytime you see a lot of volatility like you do here in Bitcoin, what it means is that there is a lot of uncertainty. And so we had a really nice, breaks. There was one here, there was one here. If you're watching this video every week, you'll know I was bullish on Bitcoin all through this period. Make sure you're subscribed to the channel because I am doing this analysis every week. It's free. But now we have falling tops, which are a sign of pessimism. You can see the stock scores have gone fairly red, and I think we're more likely to move lower than higher. Now I'm still going to say neutral. If we look at the short-term, say 1 month chart on Bitcoin, it's been kind of stable the last few weeks, but it's all over the place, and that makes it difficult to predict. I think there's better places to trade, quite frankly. Now, US dollar tends to weaken if the expectation is for lower interest rates. So when we look at a 6-month daily chart, you can see that weakening of the US dollar. It had a little bit of strength at the end of the week last week, but it is still below this downward trend line, still in this downward sloping channel. I think it could come up to the top here, roll over again as the market starts to look toward the lowering of interest rates at the Fed meeting in September. Second week of September is when the Fed meets. And again, widely expected that that will lead to a drop in rates. Now, I told you we're going to look at the bond market. Here is the TLT, which is US Treasury Bond ETF. A couple of things. First of all, downward trend line broken. It was broken after the build of a rising bottom. So that means that optimism is forming. And since then, we're sort of going sideways the last 4 weeks, but generally this points to a higher bond market, which means lower interest rates. The bond market predicts what the US Federal Reserve will do with interest rates. They're very good, the bond market is. It's very good at predicting what the Fed will do. Right now, heavily favoring a 1/4 point cut in September, but also more cuts before the end of the year. And as we start to move toward those future cuts, we should see the bond market move up, pricing in those lower interest rate cuts. That's going to be good for things that are interest rate sensitive. The small caps, real estate investment trusts are looking better. We're seeing the Canadian real estate investment trusts improve because, of course, the Canadian central bank has already made 2 interest rate cuts. So different things going on. I think the US has got to play catch up on lower rates, and that's going to benefit, obviously, the bond market, but also some of those interest rate sensitive vehicles. All right, so my ratings then, let's jump into those. Neutral on both time frames for large cap US, NASDAQ, and US small cap. Canadian looks better, bullish on both time frames. Gold, one of the reasons the Canadian market is better, again, bullish on both time frames. Oil, I've got neutral, but in the very short term, it's been kind of weak. US dollar, short term bearish, but still long term neutral. Bitcoin, I've got neutral in both time frames, but really starting to look kind of bearish in the short term. And I think you want to be careful there because of that volatility, because of that uncertainty. And then the bond market, I've got bullish on both time frames. Now, next up, I'm going to look at the trade of the week. We have a stock that this week made big gains, very liquid, very abnormal, fit right in with my day trading strategy, which of course you can learn more about at Stockscores.com. Let's, before we get into that, just thank our sponsor for this week's video, Lithium Ionic Resources. I love stocks that are breaking downward trends and starting to build rising bottoms. Now, lithium stocks were very strong in 2022-23, but they've really dropped considerably since. You're going to see that on the chart in just a moment. And now we're starting to see buyers bottom fish the group as lithium prices are beginning to stabilize. This particular company has some deposits, some exploration projects in Brazil, which is generating some interest in the stock, I think, and it really is where the upside for the stock is. You can learn more about that at Lithium Ionic. I tend to be more of a chart trader, but I read a little bit about the story. It sounded pretty good to me. What interests me, however, is the fact that we are building this rising bottom here on the chart. If we can break through 70 cents from a rising bottom, I think this can start to rebound. It's been in this downward trend like most lithium stocks have been for a while, and it's now flirting with that downward trend line. So that's something to keep an eye on. All right, trade of the week, an example from what we looked at in the active live service at Stockscores.com this week. This is ASST. It's a stock that was trading fairly liquid and abnormally in the pre-market session. And one of the things I've been doing lately is looking for stocks that are active pre-market, and then early in the trading session, sometimes in the first couple of minutes, they break with abnormal volume, strong liquidity. So I use an indicator called the action candle indicator. If you've been here for a while, you know I talk about this all the time. This little pink and yellow dot is an action candle. And you can see the pre-market action was sideways, stable. It was fairly liquid, and then it broke right here. And the stock then went on this nice upward move until the upward trend line was broken right there. So buying at the green arrow, selling at the red arrow, and it worked quite well. Well, I hope you've enjoyed this week's Stockscores Market Minutes. If so, please do me a favor. Click on the like button, subscribe to the channel, and most importantly, trade well.